Our fourth speaker for today is Phil Russo. He's the CEO of Toubani Resources Limited. Phil Russo is an experienced mining and finance professional with 20 years experience in corporate development, project development, and capital markets. His past experience includes various executive roles within corporate and project development, strategy, and capital markets at Barry Gold, Dashan Gold, and Perseus Mining, both here in Perth and Toronto, as well as several years at a North American investment bank. Mr. Russell holds a Bachelor of Science in Applied Science and an MBA from Curtin Business School in Western Australia. Please let's put our hands together as we welcome Phil.
Thanks very much. Excited to talk about the Toubani story today. We're kind of at an inflection point for the company, and it's fitting to be talking about it here at Africa Down Under because these are the opportunities you find in Africa, because this deposit particularly would have been mined long ago if it was anywhere else. And so we're quite excited as a company, and I'm looking forward to walking you through where we're heading over the next few months. So just important to just put out there just our vision for Kabata. We have the Kabata deposit here in southern Mali. The goal here is to be a high production, low cost, and the key word here is oxide gold development project. That there is what makes Kabata so compelling. We have an abundance of this oxide material, and because of that, we can have a project here with a really lean capital cost and a really strong margin profile. And you put those together, you have strong economics. And so that's what's really driving us and our level of excitement at Toubani. In essence, our company is really in these summary points. We are oxide, we're near surface. Most of the resources within 150 metres from surface. We're free milling, that's all ore types. There's no refractory ore here. We've got a 2.4 million ounce resource that was updated a few weeks ago. 64% of that is in the indicated category. We are a permitted project. We have an existing mining and environmental permit. And like I said, we are a free dig, soft rock, and we have scale. And you put all those ingredients together, you can have a really low all-in sustaining cost, and that's what we're working to deliver. We're really underexplored. The more you drill here, the more gold you find. And I'll talk you through why we're excited about that part of the company. And this presentation is really pitched as an undercurrent for investors. I look at everyone in this room as a potential investor in Toubani. If you put all those attributes together and you look at it and you couple that with our valuation, you can see that we are quite disconnected from the peers for reasons that are non-fundamental. And I think I'll walk you through those today. Like I said, we're in southern Mali. We're not too far away from Goulamina, it looks like. About around an hour and a half's drive from Bamako to site, sealed road. Easy journey there. We don't pass very much. So we're pretty safe and secure down there and well established. Again, I don't have to tell this audience this, but West Africa is as a large audience of capital, corporates, and investor attention. There's been several mine builds in West Africa, lots of corporate M&A activity. So for us, we're well placed in that, whether we're building this project or something else in our journey happens, we are well positioned. Again, we've got the right team in place. Most of the people you see here have joined the company in January or this year. This company only listed late last year, so for us, the journey is quite new. The majority of the faces you see there, like I said, have only joined in the earlier this year in the last few months, and they're really driving the new strategy that we have for Kabata. And I'll talk you through what that strategy is. So far in 2023, like I said, we listed late last year, we've defined an oxide dominant strategy, we've bolstered the technical team here, we've simplified our listing structures, we've made some new discoveries, we've strengthened the board. In the last few months, I guess we've reviewed the existing 2021 DFS that was here and the existing MRE, and we've got past those stage gates, and now we've appointed Lycopodium to update our DFS, and I'll talk you through what they're going to be working on and why we're most excited about that and what we think will come from that updated 2021 DFS. And this is the prize. So this is the Kabata deposit. It's one single, like I said, near surface oxide dominant deposit. It's across 5 kilometres of strike. It is open at depth. And like as you can see there, that's our updated resource. You can see we're 2.4 million ounces at around 0.9 grams a tonne. And I'll talk you through why not all grade is equal. Like I said, this is a free dig, free milling deposit. It lends itself to some really strong operating cost profiles, and I'll talk you through that. So it's 5 kilometres in strike and it's 250 metres in depth. It's broad, it's continuous mineralisation. And as you can see there, that saprolite or oxide ore, what's unique about Kabata is it extends basically to 120 metres in places. The average is around 70, but the weathering profile is quite deep. And that's a real advantage for the project. I think that hasn't been leveraged to its full potential, but it's something that we are leveraging as we reposition Kabata over the next few months. There it is, so you don't have to visualise it. This is, like a lot of the deposits in West Africa, has had its artisanal activity a long time ago. We have 150,000 metres below this drilled. There's around $100 million already sunk into this project. So it's a wonderful platform for the company to have it inherited and for us to go and build something off. So again, a wonderful indicator there. And that's just on one shear zone. As I'll show you shortly, we have multiple shear zones. Again, I like to point out this chart. It's the forgotten value in this project here. Like I said, it's been well drilled. The average depth is 110 metres, but it is open at depth for the entire 5 kilometres of strike. Some of those hits there, if we were a company starting off with 60 metres at 3 grams, 56 metres at 2.8, it'd be a completely different story. So while we have a lot of the sub 1 gram material, we also have numerous high grade broad intercepts from top to bottom in the deposit, and that's what's exciting about the land package overall, is the potential to find more of those hits where we haven't yet drilled exists. And I guess what I would ask you to take out of this deposit is the yellow bars. So again, top 100, 150 metres, oxide dominant deposit. You can see that there clearly on the left-hand side. And then on the right-hand side, for where I'm looking here, most of that oxide is in the indicated category, and that's going to underpin our reserve work that we are working on as we speak towards that updated DFS early next year. And this is, I guess, what's underpinning our desire to update the 2021 DFS. If I could just point you to that image to the right. If I could just summarise it really succinctly, that blue bar is 3 million tonnes a year throughput, which is what they were doing in the previous study. And they were mining that dark bar you see there. And what we saw was a large stockpile balance being created. And what we asked ourselves as a new board and management team was, if we mill something closer to what we mine, what does the project look like? And it looks materially different. And so that 100,000 ounce base case that was there demonstrated a couple of years ago, we're talking a step change in production, we're talking a step change in all-in sustaining costs, and you put that together, you've got a step change in economics, and it's why we're so excited. And again, we are lowering the technical risk profile of this project as well by setting it up for success with higher throughputs and a lower operating cost basis, the project will really have its best chance to succeed. And again, and just to further to that point, these are these areas that we're going to be focusing on in this updated DFS. So it's that 3 million tonne throughput, higher throughputs, minimising those stockpiles on the mining side, larger equipment, and then critically that last line there, inferred conversion drilling. So we think we can reduce the strip ratio as well, which means obviously that's going to help your operating cost profile, but also increase your reserves. So if you put all those things together, you can start to see why we're building with some excitement internally about what this repositioned Kubata will look like. And like I've said earlier, for us in our company, not all grade is equal, especially when you're a soft rock dominant project. For us, it's margin over grade. If I look at all the successful companies or the successful assets going around, it's margin. It's generating cash. And for us, we've got that soft rock and the abundance of soft rock that we can leverage to go and focus and demonstrate that over the coming months. And not only on the operating cost profile, but also in the capital profile as well, because of the free digging nature of this ore here. There's several stages of our mine to mill that we can do without. It's a luxury we don't need, and that is added emphasis to why we can create the project that we were talking about here, that is lean on capital but strong on operating cost. And then lastly is sort of another string to our bow here is the exploration side. So the dark red there, that's the Kubata pit I just walked you through. But where you see all these numbers and dots, that's where we've hit mineralisation in our previous drilling programs. And so the more you drill, the more gold you find here. We have no resources on those other shear zones. They have the similar geological features as Kubata. So it's a matter of drilling for us. We clearly got scale at Kubata, but the more you drill here, the more gold you're going to find. And the best one from our recent program was less than 1 kilometre from Kubata. And we had no drilling there before. We just had some artisanal activities. So we put the rigs below there and we hit a good level of continuity here across 600 metres, 200 metre sections. And so, again, really exciting for us to be able to find more oxide ore the more you find here. We're clearly sitting on a district potential property, and this asset has been flying under the radars for far too long. On the social side, we have 5 villages around the Kubata deposit. One is Kubata, the Kubata village per se. We enjoy great relationships with our local communities. We have a constructive dialogue with them. We employ them as part of our drilling programs and several community initiatives we implement. I'll be in Mali in a couple of weeks and we'll go around and meet the villagers and see the progress of some of our activities there. And for me, when we talked about all the attributes of Toubani, you have to sort of marry that against our valuation. And for me, oxide-dominant projects that are rare to begin with, that are free milling, that are permitted and have scale should not trade where we trade. And so I think this junior development space, particularly in West Africa, has never been cheaper. But for us, Toubani, and we're on that journey really rapidly here, is to bridge that gap with our peers in terms of valuation. But projects like ours shouldn't be at this side of the curve for too much longer in our view. And if you couple that with the projects that are actually got studies on it and or reserves and are advancing down the development pipeline, it's even rarer. The number is even more limited. 2 of these projects have been taken out this year. So for us, Toubani is going to have a seat at the table here over the coming months. And I think what differentiates us from these projects is that we can have a capex to production ratio to opex margin profile that'll be really differentiating to our peers. And that's what, again, makes it so exciting for us here at Toubani. And just the last two slides here, our strategy is really focused on de-risking Kubata, and we'll be doing that. We've appointed Lycopodium, like I mentioned, that happened this week. We'll commence a drill program shortly, and we'll continue to push Kubata towards a shovel-ready status over the course of this year and early next year, and then we'll see where that journey takes us. And so, as an investor, you sit back, you enjoy the re-rate, and at some point in time, we'll make a decision to put this project into production. But for now, it's about de-risking her, and that's what we're doing with the engineering and the drilling. And I'll just finish here on this last slide. Again, I like to reiterate the valuation. The risk reward is really in investors' favour here. And we're going to be pretty active on the news flow front with the drilling and the engineering and some other things that we're working on. And yeah, compelling hard assets, gold development projects, they're rare in the sector, they have a value, and they find a home generally. So, thanks very much.